Now, one of the things which at the margin people have been talking about, and especially it picked up momentum from yesterday afternoon when the market started to sell off, was the Sebi rules which require FPIs to disclose their end ownership, beneficial ownership. I mean, that's a technical word for it. There's a deadline coming up, which is the 1st of February, by which when they have to disclose. But that is not, I mean, in a way, the hard deadline. You got time after that for repair and what they'd like to do. What those who don't want to disclose what they'd like to do. So there is time. There's an important issue. Lata is here, and she's been speaking with her sources with the market regulator. Lata, tell us more.
Yeah, actually, sources very highly placed and close to Sebi pointed out that the number of funds which were thought to be impacted by this rule. Let me remind the Sebi rule that if one fund holds more than 50% in one group, then they have to disclose who are the ultimate beneficial owners, right up to the granular detail. And then there was the other one that, over 25,000 crore owning funds, which are in the border countries. Their exposure, they have to also tell us the final beneficial owners. Now, in the first rule, where this concentrated holding in one group was concerned, this source told me that originally the paper thought that about 2.6 lakh crore of funds would be impacted. That would be about 5% of the market cap, of the total FII ownership in India. Now they think that it will be far less, when they go through the sieve, maybe probably at best 2.2 lakh crore. And they've also, the source also told me the list of people who will be exempted from it. Sovereign wealth funds are obviously exempted from it. Some listed companies own shares in India. They are also exempted because they would have concentrated ownership, but they're listed in their own countries. Also, publicly, funds which have a large public holding, those are excused. And other regulated pools of investment vehicles, which are regulated, like, say, in the SEC in the US, all those are also excused from having to provide the final beneficial ownership. Also, they are, giving a very free hand for those funds which have concentrated holdings in Indian companies which don't have an identifiable promoter. Like, for instance, HDFC Bank, ICICI Bank. There is no identifiable promoter, so there is no question of the MPS rule, the minimum public shareholding rule, getting sidestepped or price discovery getting, distorted. So if you own, say, all your 50% stake is in one HDFC Bank or ICICI Bank, again, they get a free pass. They don't have to disclose the final beneficial ownership. The other point that the source pointed out is that the SOP, the standard operating procedure which custodians follow to find out whether you come under this rule or not, was already available on the website of the custodians way back in October. So funds had all the way till February 1st to disclose. And after February 1st, they get 10 days to write to the custodian. So technically, you have time till February 10th. And after that, if they still qualify as those with concentrated holdings, they can sell down till, another 6 months. So technically, Sebi had started conversation, the consultation paper, etc., way back in June. They had time from June to another 6 months from now, which is about 15 months, to reduce their holdings. To blame it on 2 days, this source said, looks a little strange, because they had all the time in the world. Even the SOPs were ready from October 1st, and they're going to get another 6 months to sell down. So this source didn't see any connection between the Sebi rule and the selling that's happening.
The point is that if you want to be in a market in India and you've got 6 months, you figure it out. We've seen this happen in the past.
And you had 6 months earlier also.
Yeah, I mean, even there is 6 months. It's a fairly long period of time, and I mean, there are ways we can discuss this more as the day goes along. But Lata, thanks very much for getting us that. I think we